All right, welcome to the live stream, everyone. Here with me is Dan Frio. My name is Kyle Seagraves. So we are loan officers. We're licensed in all 50 states. And what we're going to do on this live stream is answer your questions about buying a home, especially with how tough the market is, with how high interest rates are, with how high monthly payments are. We want to answer your questions if you're getting ready to buy a house or you're just kind of on the sidelines, kind of freaking out a little bit. So today, what we want to cover first is what's happening with interest rates and where we expect them to go. And Dan is our in-house full-time economist, basically. Would you take that title?
You betcha. So, I always tell my kids the same thing too. It's okay sometimes to say you don't know. Okay. And here's what I mean by that is there's so many things going on in the market right now. So you have basically the perfect storm of stuff. And you have the Federal Reserve that still has their foot on the gas pedal. And there's a huge variance in spreads on bond yields. So I won't get real technical with you. But basically right now is the perfect bad storm, I can say, is you have a government shutdown that's maybe right around the corner, especially that one of the right wing's head honcho just got booted last night. So there's probably going to be even a less chance for this thing to get worked out, quickly. You have all these companies or all these unions that are on strike right now, and that's going to cause headaches all around the country. You have prices skyrocketing. Thank goodness right now we have oil prices retracting a little bit. But oil, basically, when I talk about oil, a lot of people are like, I don't get, what's that have to do when you're buying a house? Well, it has to do with inflation. Okay, because oil is basically the lifeblood of our economy. So when oil prices go up, gas prices normally follow, and then the cost of goods and services because of that continues to go. So, and now the Federal Reserve was also sitting there saying, okay, we're going to maybe raise rates again, and the jobs numbers. So let me just kind of put it in a nutshell. I think they've overdone it. I was watching an analyst this afternoon, and he agrees with me. The spreads between the 10-year Treasury and mortgage-backed securities is about 200 basis points. So that means things are way overdone right now. What has caused interest rates to be at the historic lows that we've seen in my lifetime was COVID and overstimulus of the economy. What happened was the Federal Reserve stepped in and they were buying up mortgage bonds. And you don't have to understand any of this, but they're buying up mortgage bonds, causing the prices to basically collapse. Okay, that's what happens when you start buying they start buying it and prices start going up and up and up because they were buying like $40 billion a month in mortgage-backed securities. And that's what you hear on the news if you hear quantitative easing. So the Fed was quantitative easing. They were buying all these mortgages and they were artificially making mortgage rates lower than they should have ever been in history. And then what happened is they stopped buying. So that now there wasn't a lot of buyers in the market. And then now what they've done is they've reduced their balance sheet this year alone by $1 trillion. So not only are they not buying mortgage-backed securities, they're selling them. So when you have way too much of an item in the market, it causes the prices to come down. And in bonds, when the price comes down, you have rates going up. So right now, you just have the perfect storm of everything. I'm not expecting this to last. A lot of economists aren't expecting this to last. You might have people out there saying, oh, rates are going to go to 8, they're going to go to 10, and they're going to, if the Federal Reserve doesn't know, and you have guys, guys and girls on Wall Street making millions and millions of dollars, that is their job to figure this out. If they can't really pinpoint it, I wouldn't really be following, a YouTuber or even like myself. I just give you the data and let you extrapolate it yourself. But, when people say, hey, told you rates were going to go to 8. Well, you didn't see all these things coming 6 months ago, nor did I. And nor do we don't know what tomorrow's going to bring. So the Russian war, that's still adding pressures to everything. So basically, in a nutshell, it will retract. Inflation will come down. We're going through this little blip phase. And if you're still looking to buy now, you don't have, everybody kept saying, I hate these bidding wars. I go in, there's no houses available. Then when I bid on it, I got to bid 100,000 more. Well, you got your wishes. There's not a lot of people bidding on houses now. So you have the opportunity. And then probably in a year or two, you're going to have the opportunity to refinance your rate. Do I ever expect them to go to 2 or 3% in my lifetime? No, not again, unless we have COVID again. So you're probably going to see rates teetering on about 5.5%, 6% long term. So this is just kind of a little blip we have in the radar. And so that's kind of the economic calendar of events. I know it wasn't hugely accurate, but nobody can give you accuracy right now. They just can't.
Yeah, I think that's the problem is a lot of people are so certain about what the future is going to look like and trying to either convince people to use that information, or I think a lot of people are just, they're getting a lot of the fear of this is what could happen in the future when ultimately nobody knows.
Right.
Just like you were mentioning, it's like, okay, all of these experts, the people who are making the decisions about what's happening with, or what we're going to respond to with inflation and what's happening in the economy, if they're not aware of what's going to happen exactly, then yeah, people on like us, it's not valuable for us to say this is exactly what's going to happen, and you should make your decisions based on that. What is your thought though for somebody who's looking to buy right now? Because I think what a lot of like people who write articles or who make videos, anyone who's in like the content space about housing, they are trying to predict so much about what's going to happen, and they almost act like when people are buying a home, they're like buying only for purely financial reasons. Like the only reason they want to buy a home is because they want to get a low rate. When we know that most people buy a home not because of financial reasons. They're either looking to get out of renting, they wanted a better quality of home that they wanted to live in, they needed a bigger yard, they needed an extra room for like a new child. Like there's all these reasons for people to buy that isn't just about money.
Right.
So how would you help somebody who is in that spot where they're like, I want to buy for a reason that's not financial, but this is the roadblock that I'm running into is rates seem to keep increasing. The monthly payment seems to keep going up.
Yeah. So here's if you could qualify, here's how I guide people. So I have consultation calls every day, all day. And that's basically the question. People are asking me, what's going to go happen to mortgage rates and what's going to happen with this? Here's the scenario I would paint for any first-time home buyer if you could qualify for this program. So we have a lender that we're working with that has partnered with Fannie Mae. And it doesn't matter if you understand who Fannie Mae is, but they're a huge entity out there that basically approves most of the loans in the country when it comes to conventional loans, FHA, and VA. Okay. So we have a lender that partnered with Fannie Mae, and it's in regards to a first-time home buyer program that Fannie Mae has. And that program only requires 3% of a down payment. Okay. So this program will gift you 2% of that 3% as a down payment assistance program. Okay, you don't have to pay it back. There's no lien on the property. It's in essence free money, kind of. There's nothing free, but it's basically free money to you. There's not even any consequences in it when it comes to taxes. All right, so that's the first piece of that puzzle how I would direct somebody to go, and we offer that program. The next part of the nice piece about that is it also doesn't require that you pay PMI or mortgage insurance. Okay, normally what happens when you're buying your first house or when you're buying a house, if you don't put 20% down, you need what's called mortgage insurance. And that equates out to usually about $100 per 100,000. So let's say the average person we're getting right now, believe it or not, is buying about a $250,000 to $280,000 home. So let's just take 250. So $250,000.
Wait. You mean not everyone that we talk to is buying in San Francisco? Is that what you're saying? Not everyone's buying a $1.5 million house?
And it looks like this should be a Halloween edition.
Yeah, I didn't have my decorations set up for tonight.
Halloween. So the nice thing is you don't have PMI. Okay, so that equates out to about $100 per 100,000. So by going with that program, you're going to reduce your payments by about $200 to $300 a month. Okay, fantastic program. Now there's a video that I just posted, and Kyle's going to show you. We've started our own newsletter, and I think in this Friday's edition we're going to have the explanation of how a 2-1 rate buy down works. And I just walk you through that scenario. So basically what it is for the first 2 years of your loan, you're going to get a lower payment. Okay, and I walk you through how to do that. So I won't go through it on this channel. I'm not going to blow the thunder of my video, and I don't want to waste a lot of the time because we're on here to answer a lot of questions. But I would go with the loan that we have. That's a 1% down. Okay, and then it also has no PMI. And then also look into the 2-1 buy down. We can work with you. We can work with your realtor to educate everybody on how it works. We can come up with the calculations on how much is needed to fund that account and exactly, the whole breakdown of that loan. So that's how I would structure loans today. If you don't qualify for it, The old adage before was, nobody really wanted an FHA. That if you've got an FHA loan, you have bad credit, or you have this, or you have that. FHA rates right now are better, much better than conventional loans. So if you don't have a 740 credit score or higher, and you're not putting down 20%, all day long I'd be looking to do an FHA loan. People might disagree with me, but I've done this for over 30 years. That's how I would even talk my kids into, that program and the whys behind it. So FHA, fantastic rate. There is an FHA fee that you pay, but you'll satisfy that in a year or so. That's the
And
way
I
to
just
go.
made a video on that recently about, it was maybe a couple weeks ago, about how a lot of conventional loans, it used to be like the conventional loan was the cheaper option. And now with the changes, the LLPAs, the price changes that have happened recently, basically with how conventional rates are made, is FHA is actually cheaper for a lot of home buyers, even with the upfront mortgage insurance, even with the mortgage insurance that stays on for the life of the loan. It's still cheaper, like you mentioned, because of the lower interest rate. And I think a lot of people are missing out because they're going off of anecdotes instead of actually looking at the actual numbers of the deal.
And that's why we created this newsletter, because we're going to put components in there that you guys can use. Because a lot of people just come out and tell you, oh, do this or this. What I like to make you understand, and with Kyle, on all his videos, we try to figure out the whys behind everything. The question that you might have is, are rates going to hit 8%? So we then come back and why would they hit 8%? So in our videos, we try to help you, explain the whys behind things. So please, if you want to check it out, we're created a new newsletter that's going to come out each Friday. You can sign up for that, and every week's going to be about 3, 4, 5 different components of it that you can actually dig into, and really, we'll give you tools to look through, work with. And updates on what's going on in markets, where houses are still affordable, where houses, they're not affordable anymore. Calculators on different, like 2-1 buy down calculators, how much could you qualify, things like that to help you, give you the tools so you guys can make financial decisions for yourself, not rely on the news and, everything else.
Yeah, so if you do want to get up to date on the market updates that we have, I have the link in the description. If you're interested in that, I do want to jump into some questions really quickly. Arturo said there is an income limit for one conventional or 1% down. Yeah, absolutely. The limit here is the Fannie Mae Area Median Income Lookup tool. So if we scrolled into, wow, that just really threw me in that map very quickly. All right, Dan, name a city.
Dayton, Ohio.
All right, let's look in there.
If we look in Dayton.
So the limit then for a 1% down loan would be $73,000. Well, it's hard to see on this, isn't it? $73,920 per year of annual gross income. That would be the income limit for 1% down.
And those incomes vary. Like if you were to pull up, say San Francisco or New York, for example, New York, it might be $90,000, $100,000. I don't know how you'd survive in New York at $100,000, but I can see Dayton, Ohio making $75,000. You'd be good, but in New York,
and then
but it varies by your state and your county.
Right. Arturo said also be careful from lenders that offer 1% down programs. They use it to get your attention, and then they tell you do not qualify for that because you make too much money. Then switch loan programs. I'm sure some people do that. About, what would you say, 30 to 40% of the loans we're doing now are 1% down programs.
Yep. We did 3 approvals today. So yeah, that is it. You're accurate. What we try to do on our channel is say, these are available to you. When we're going over that, our thumbnail might not go over the income limits, but you can't do that on your thumbnail or anything else. But I can almost assure you, when we're doing our videos, these are the things that we put in there. We tell you what the minimum credit score is. We tell you in many of the videos, you can probably check them out. And if we forgot on one that, I might have talked about one and maybe forgot it, but many times in the description, we'll even put the link like Kyle just had, so you can look up exactly where you're moving to or where you live to see what the income, calculations are in your area. That's why we're an open book right here. That's why Kyle just brought it up. He even told you where to go to find those income limits. But yeah, that program does have income limits, but I sent out 3 pre-qualifications today on that program alone. So it does
Yep.
work.
Drew, good to see you again. I was joking with I was joking with Dan before we started. I was like, man, the first comment after us not doing a live stream in a couple months is Drew saying or e-gun. And we were we were both like, wait, how do you say it? It's not just Oregon. Oregon.
Oregon.
Oregon. That's really not it? We sure about that? Cord said, hey guys, hello, thank you for being here. Ashley, Denise, you want to jump into some questions, Dan?
Sure. If you can read them, I'm having a tough time. I'm like part of the
yeah, I can read
I'm
it.
on my phone. I'm having a tough time reading it.
Yeah, I can read it for you.
Okay.
Ashley, so you said, I believe rates will continue to increase. And I think, Ashley, you might be referencing, I did put a poll here in the chat. And let me see. What do we have on here? So I said, where will rates be by the year, end of the year? And just under half of people said 8%.
Okay.
So is that kind of where you're thinking, Dan, for rates?
My prediction
if you had
at
a
the
guess.
beginning, I'll give you my predictions, and I botched it because we're in October. The rates can change fairly quick too. So I'll make that analogy. My prediction was the housing market would be completely flat. We wouldn't crash. I said, but there's areas in the country like San Francisco, Southern California, Texas, Austin, Texas, some areas that would probably see double-digit declines. And so far, I hate to admit it, I'm right on the button. You have half the country up between 0 and 5%, and then you have Austin, Texas, the worst loser so far this year, down 11%. So I was dead right on that one. Where I'm wrong is I truly thought, and you're going to probably see this happen quicker than the Federal Reserve is coming out and telling you, but you're going to see inflation coming down quite a bit fairly quick. And here's my analogy behind that. And actually, I'd love for you to explain why you think they would go to 9, the dynamics behind it and the economics behind it. But here's the one thing. We all know that what's happening is happening because of the Fed. Okay, the Fed is trying to protect us from inflation running out of control. And they need to, because if the cost of goods and services keep going up 10% a year, our wages aren't continuing to do that. So it's not sustainable. Okay. But I think one of the things that a lot of people are missing, and I just did a video on this the other day, is the student loan repayment plan. Okay. The student loan repayment plan, there's 45 million people with student loan debt. The average person has between $300 and $500 a month in those payments. So when you extract out that data, it came to about $6 billion a month that people are going to now have to start allocating to student loan debt that they used to buy stuff and maybe save. Okay. So when you take $6 billion out of the equation, and now we have oil prices starting to come down and a lot of other things taking place, I see this as basically the tip of the iceberg. And we should be at our peak, and then we can go through bond yields and in all kind of pieces of the economics, like a Fibonacci levels and so forth. And I'm not going to go into economics here because we'll lose you guys. But right now, the mortgage-backed security bond market is way out of skew versus the normal bonds. And we're about 200 basis points over where the Federal Reserve's neutral rate is. So that's telling us things are a little overdone. So, can rates hit 8? Absolutely, they can hit 8. But can they go back down to in the 6s fairly quick? They could do that as well. So you're going to start seeing jobs data coming out each week and each month. And if you wanted the economics behind things, check out my channel because I do this every day. I do about a 6, 7, 8 minute video kind of explaining the economics. But you're going to see, I think everybody's going to be surprised. And I also did in a video recently, I said the Federal Reserve is basically holding their cards up their sleeve right now. If they came out and said, okay, we love the way the inflation looks right now, you would see the stock market go up 1,000, 2,000 points, and you'd see more bond yields, just crumbling. They're not doing that. They're holding their cards to their sleeve, and they keep saying, and they all have the same thing that they're saying is, well, if the data provides us, this information, we can still increase rates. Well, if you extrapolate that the other way, if the data does come in that we like, then we can reduce interest rates. So, but everybody takes the context of the doom and gloom because that's what sells. So Ashley, I
Yeah.
apologize for a 15-minute dissertation, but that's kind of the economics behind rates. And so they will subside. This is a
Yeah.
blip in the radar, but it might be giving a lot of people a chance to maybe buy a house if that's what you're looking for without a lot of competition. And that's what a lot of people were looking for.
Yeah. Yeah. And Ashley, I think you're right too, that 2 to 3% rates was a
No,
completely
they're gone.
fabricated environment of
Yep.
the Fed purchasing billions a month of
Billion
mortgage-backed
and billion.
securities.
Yep.
And yeah, that's just not likely to happen in probably the next, 10 years at least.
Well, I've done this for 33 years, and I mean, 5.5 was a fantastic rate, throughout that duration. Then when you got rates in the twos and threes for 30-year fixed, that's why you're not seeing any people like myself. I'm in my house, my rate is 2.625. I don't even prepay it. It's like free money. So if I go buy a house now, it's 7.5. So I'm just like, well, I'll just stay here. So I'm not going to put my
Yeah.
house up for sale. Or if I can cash flow it because my payment's so low, I'll rent the thing out and buy another house and let this house make that other mortgage payment. That's why you're
Yeah.
not seeing any homes coming to the market.
Zach, you asked, will we see 4 to 5% rates again by the end of 2024 or the start of 2025? That's kind of where, especially that longer time horizon, is just impossible to predict. Ultimately, what a lot of people are expecting is that when we see inflation go down to the Fed's target 2%, then is when we're probably going to see the Fed start to alleviate the interest rates, take down the Fed funds rate, which isn't directly tied to mortgage rates. But basically, when we start to see inflation come down, that's when mortgage rates are going to start to likely come down as well. I feel like it's going to be very unlikely that we're going to see 4 in the next 2 years. That's my personal take. I think it's going to be closer to 6, maybe 5.5 is what seems like a more stable point for the mortgage market after inflation is back down to the target. And then we start to see maybe a little bit more economic stability in other markets as well. But at the moment, that time horizon is just way too long to predict. And it's not helpful if either of us really try to pull something out of a hat.
Like I was saying earlier, it's okay to say you don't know. And I have no idea where rates are going to be in January, let alone in 2024, 25. And I'm not trying to be smart about it. It would be 100% guess.
Let's see. Nacy 369 said, when is a good time to buy? That really comes down to more of a personal question. I usually run by 3 rules for me personally that I would buy. I used to kind of figure out like if I'm going to buy no matter what the market looks like. Number 1 is figuring out, is the payment actually affordable for me? Is it something that actually fits comfortably in my budget and I can achieve everything else I want to do? I still have an emergency fund saved up. I can still save for retirement and other investments. I can still pay down debt if I need to. I'm perfectly comfortable with extra cash left over at the end of the month. So number 1, is your payment actually comfortable for you? Number 2, are you planning to stay and live in the home for at least 5 years? And the reason that is 5 years is that when we saw home prices dip over the past 50 years, we had 2 dips that were 3 years long to recover your money, and then 1 dip that was 6 years long to recover your money. So even if you bought at the height of 2008 or right before 2008, and then the housing market, all the prices dropped, it took you 6 years to recover your money. So that's why I say 5 years is going to be a good estimate for how long you need to be in your home to make sure that you're not going to take a bath. If we're relying on historical data, you're not likely to lose money on that home. And then third is making sure that after you buy a home, you still have enough money for 3 months of emergency expenses. So 3 months to cover your monthly living expenses. That way you don't buy a home and you drained your bank account and now you have to go into debt to pay for furniture, moving expenses, paint, changing locks, the whole deal there. To me, that's what makes me feel very comfortable about buying no matter what the market feels like. And so those may be helpful for you as well.
Perfect.
Jessica said, let's see, 5% of money left over after rent, food, utilities. Oh, okay. It sounds like that's Jessica's kind of buffer for what they're expecting. And then, we do Dan and I do a terrible job of plugging. So if you do want to get pre-qualified with our team, you can go to winthehouseyoulove.com. We work in all 50 states, and we can do almost all loans that you've heard of: conventional, FHA, USDA, VA, bank statement, the whole deal. And we'd be happy to help. Let's go to some other questions here. Not sure when to sell and buy. Okay, so we did cover that just a little bit. The tough part, like you were mentioning, Dan, with selling is like if you have a low interest rate, really one of the better financial options is renting it out.
Yeah. Right. Like in my neighborhood, there's probably, I want to say 200 homes. I think there might be 4 houses on the market. So we're all, in our 50s, 40s, 50s, whatever. They're sizable homes. Nobody's, unless you're downsizing, you're probably not selling. And, could I sell there? I mean, basically I'd have no competition. That's kind of nice, but it's also on the other side, it might be scary. Is there a demand for, my priced home out there? But there is no really perfect time. You can never time anything perfect. Watch everything you can, even about the stock market. You're never going to ultimately buy at the low and sell at the high. Most people buy at the high and sell at the low because you're following the herd.
Cecilia said, I'm going to buy right now, no matter what the rate is. I'm tired of renting. You have any thoughts on this?
It's the horror stories I hear from renters. Now, I'm sure on the other side of the coin, there's millions of people that love renting because they don't have to worry about the toilet clogged up. You call the landlord. But a lot of people just, they want to buy their house. But there are horror stories out there where, there's still slumlords out there. You have a family of 5 or 6 living in a 2-bedroom, 1-bath, little place, and they're bursting from the seams, and they're like, we just can't do this anymore. So I feel for a lot of people.
Isaac Awar said the Fed is keeping rates higher for longer. They've been saying that for the last 2 years. Get ready. What was the quote from somebody at the Fed that was saying something along the lines of like they were trying to like inflict pain? Do you remember what that was?
Yeah. Powell said about a year ago, we're unfortunately everything we're going to be doing is going to inflict pain on those out there, households, especially when it comes to housing. So let me just give you a tidbit on that. If you go back and you Google, I think it was in 2021, the Federal Reserve came out in 2021. I think it was even September of 2021. And they said, we have no plans on increasing rates until minimally 2023. Then in 2022, we had the most increases in rates in history. So that's where I'm also saying is, if the Federal Reserve doesn't know what they're going to do next time, there's nobody, even myself, I can't predict what's going to go on. So check it out. Just put in there, Google, Fed announces they will not raise rates till 2023. I guarantee you're going to find it. And I think it was September of 2021. So less than 2 years ago, they said they weren't going to increase rates at all in 2022. And they increased them the maximum that ever in history. So something to take note of.
Yeah. Korg said FHA has been more and more appealing as 2023 has dragged on. Yeah, I mean, especially from a total cost perspective. Again, like I mentioned, I had that. .com. Welcome back. It's good to see you. We haven't streamed in a while. Yeah, I had a video kind of covering like conventional versus FHA, and in a lot of circumstances, especially for people who don't qualify under the certain income limits to qualify for lower interest rates on conventional loans, FHA tends to be a lower cost solution, even with the mortgage insurance. The only issue with FHA, not only do you have a stricter appraisal, but the perception among sellers is still pretty negative. A lot of sellers still want to have a conventional loan. They think it's going to go a lot faster. They think it's going to be a lot easier. Whereas FHA loans really have a minimal impact that we've seen on closing times. It's just this perception that I think it's kind of told on and on and on and at face value. And it's really unfortunate because there's a lot of really well qualified people who have FHA loans or are using FHA financing. And it's so interesting too, because like if you look at at least on the back end as a loan officer, what we see, like a conventional loan approval, might be like teetering on the edge, right? Like, Dan, you've seen those loans where it's like, man, if insurance increases by $100 a month, it's going to disqualify the loan. But
Yep.
FHA usually has so much more wiggle room to it. And so that's what people, I don't think, see on the surface of it. They don't get to see the back end, that FHA is actually a lot easier to get things done than a conventional loan. It's also saving clients more money in a lot of circumstances, but sellers still have the perception that they want it to be a conventional loan so it goes faster and they won't run into issues, when that just isn't true in our experience. Drew, you said, I thought if you put down at least 10% on FHA, you get PMI dropped after 11 years. Yep. So if you do 10% down or more on FHA, then mortgage insurance, it's actually MIP for FHA, stays on and drops after 11 years. Also, Drew, are you still in the mortgage world? I was curious. Last time we talked, which was a while ago, I know you were out of it, so I'm curious if you're back in there.
Kyle and I took a sabbatical over the summer because we knew you guys, nor did we want to really spend our summer evenings kind of talking about mortgages, and we do them all day long. So we're back. I'm in Chicago, so it's going to be freezing here probably in about 60 days.
Ooh, yeah. Rickless Cage said, are there any refinance programs available to reduce interest rates or payments? Dan, would you like to take that?
Yeah. So here's, you know what, if I wasn't in the business, the way a lot of people make it sound like when you buy a house and you close on the loan, you're locked in that loan forever. And that is not true at all. Okay. So you can refinance. The programs that are easiest to refinance with are FHA, VA, and USDA. What they have is they have a streamlined process. So let's first talk about when you might want to look to refinance, and then I'll walk you through real quick how that process works. So you're going to want to refinance. Like if we close on your loan, we monitor your interest rate. If the rate goes down 0.5%, we might reach out to you just to say, let's look at some numbers here. Maybe it might be helpful for you. But once it hits 1%, that's when we're probably going to send you an email saying, hey, would you like to reevaluate your loan scenario? Because you can refinance anytime that you want. Okay, so here's how a lot of these work. If you're in a government-backed loan, FHA, VA, and USDA, they have what we call streamlined programs. Those streamlined programs are, as long as you have a credit score that meets the minimum credit scores required for the program. In FHA, let's just say FHA is 580, and you haven't missed a payment in the last 12 months, you qualify for a program that we call the Streamline. Okay, what a Streamline refinance is, basically we reopen your loan. Let's say it's an FHA loan. We reopen your loan through HUD, and they check it and they're like, okay, why are they refinancing? And we're like, we're reducing their interest rate, so their payment's going to go down. Okay, so they're saying, well, they've paid us every month on time for the last year, so their payment, they should be able to make the payments if the payments are lower. And they also do not require an appraisal to be done. So really all that's done, you don't have to re-verify your income and you don't need to get a new appraisal. They're just saying you have the credit worthiness that we'll just go ahead and refinance your loan at the lower rate just to help you out. So those are all the programs. So a lot of people saying, well, don't take a loan today because if rates do go down but your house price goes down, you'll never be able to refinance. Well, that's incorrect on most loans out there. Now, conventional loans are different. You would have to requalify at the time when rates come down, but you're not stuck in the loan forever. Like so many people make it sound like, oh, you're buying at these rates. Oh my God, 10 years from now, you'll be broke. No, if and when rates come down, and they'll come down, you can refinance and save, in most cases, a lot of money.
All right. Sorry, I just almost knocked over this camera. Here's another question for you, Dan. Would it be wise to build at this time?
That's a toughie. I guess that's like when you ask, when is a good time to buy? Is now a good time to buy? Building, I've never built a house. It freaks me out because I just like, seeing a house that I like and moving into it. I'm not the kind that would sit there and look through blueprints and all that. I have a tough time matching a shirt with my pants. But a lot of people, we are getting a ton of requests right now. We do have a program out there. We have multiple programs if you're looking to build a house. We call it the one-time close, and we can help you acquire the lot, build the house. We work with your builder, and we fund it. You have a year to build the house, and then at the end of the loan, most of the time when you're doing a construction loan, you built the house that was with a construction loan. Now you need another loan to pay off the construction loan, and it's called an end loan. This loan is you qualify one time and you're done. You don't have to qualify once the house is built or anything. So we do have a one-time close program for if you're looking to build a home. Please reach out to us for that. It's really some of the programs just came out because they were delayed for a long time because of the supply chain. There were so many issues that people weren't getting their houses done for a year, but they are now back, and they're coming back with new guidelines and so forth. So if you do, schedule a consultation with us and you talk to me or one of our mortgage advisors, we might say, okay, let me get all the information. Let me go back to the underwriting guidelines and make sure you fit all the parameters or the new parameters with those loan types. But yes, we do even offer construction loans if you're out there looking to build.
Anisha said, why wasn't I told about Fannie Mae helping with the down payment as a first-time homebuyer a few years ago? I closed on a 30-year fixed conventional at 2.7% with 6% down. I don't know. I couldn't tell you what was happening a few years ago or why that wasn't a thing. Fannie Mae, for as long as I've ever known, is 3% down for a first-time homebuyer. So unless you're in like a high balance loan, you're getting a really high loan amount, then it's 5% down, but you have a 2.7% rate. God bless you. I don't feel bad. I think you're doing all right.
Yeah. But everyone have to, it's the person you might have talked to. A lot of times they might not know about the program. They might know, it's like anything else. You have to make sure you're working with somebody that knows what they're doing.
Yeah. Sandra, you said, can you get out of PMI? So private mortgage insurance, for those of you who aren't aware, if you're using like a conventional loan and you put less than 20% down, then you have private mortgage insurance. Mortgage insurance doesn't benefit you. All it does is it's insurance for the lender if you don't make your payments. And yes, you pay it even though the lender is the one who benefits from it. So for a conventional loan, you would need to have 20% equity in your home to be able to have that removed. So usually that's through paying down your mortgage. Maybe you made lump sum payments to that, or possibly you had improvements to your home that increased the value. That's a way to get out of mortgage insurance with a conventional loan. If you're on an FHA loan, a USDA loan, then that mortgage insurance stays there for the life of the loan, except on an FHA loan, when you put 10% down, it falls off after 11 years. So for people who are in, let's say, an FHA loan and they have mortgage insurance, that's going to stay on for the entire life of the loan because they did, let's say, 3.5% down, which is the minimum on FHA. In that case, it's impossible to have it removed unless you refinance into a conventional loan and you have 20% equity. So I know that was probably a lot of information and a lot of detail,
yeah, right.
But hopefully that answered your question there. Let's see.
Pretty on that quick. If you're in an area, that you've saw, you had a huge appreciation on your home, I wouldn't at all discourage you to call your lender and just talk to somebody in their department and ask them, could they reevaluate your loan to see if you could get your PMI removed, even if you've only been there a year or two.
Yeah. Here, let's jump the line to Javier. Javier, how are you doing, man? He said, jokes aside, how helpful is it to, because I think he made some comments about me in a skimpy Halloween costume that I ignored. How helpful is it to have conversations about loan products right now when mortgages are so unaffordable? I think, Dan, what you and I have noticed over the past year, as we've seen interest rates continue to increase and home prices increase, so down payments go up, monthly payments go up, and it's getting tough for people to save more money with inflation, is that people are still buying homes.
Yeah.
And so for us, we take the stance of like, people are going to continue buying no matter what the market looks like, because not everyone buys just for financial reasons. A lot of people buy because, again, they had a divorce, they had a new child. There's so many instances in which people need to purchase a home that aren't just because they wanted to get a good deal on the market. And I feel like everyone that I've worked with has never come to me and said, I want to buy because I want to make a good deal on the market. They bought because they had a completely different reason to buy. And so I think that those people still deserve to have quality education as they go through the home buying process to make sure that they understand what they're doing, they're comfortable, and they're confident when they make the decisions moving forward. So yeah, even though it is unaffordable, there's a lot of people who I think still won't be able to move forward, even though they are able to get the advice. But I don't think, Dan, you and I are under the assumption that like our advice is going to make homes more affordable. We can't solve an affordability problem with people. But what we can do is, for the people who are able to purchase, help them make better choices and feel more confident about the choices that they make moving forward.
Javier, first off, I love your channel, buddy. Is that Javier, the Javier?
The Javier.
Okay.
The
I love
Javier
your
who
channel.
sells feet pics.
And like, you're a realtor and you're a great, I love your videos. There's even NARS came out and said, okay, the norm, in 2000, I think 2020 was about 6 million homes sold, but they're still predicting 4 million homes to sell. That's a lot of homes. Here's what we've seen. We've basically seen the dynamics move a little bit. Like our average loan last year was probably about 400,000, believe it or not. Our average loan right now is teetering down into the high 200s. Okay. So basically the markets like Southern California, Arizona, Nevada, Texas, Florida, those areas where everybody was migrating to and the FOMO was really out of control, we get hardly any business from those right now. Where we're getting a lot of business from, honestly, is Illinois. I'm in Illinois, and we are actually the highest appreciating state in the country right now, which I never thought that would happen. Ohio, Pennsylvania, Michigan, Indiana, Oklahoma, Arkansas. These are the areas that now we're seeing. And I just talked to a person in Atlanta right before I left the office today. And I'm like, the house prices. And he's like, it's not crazy here. We never saw that huge appreciation. And, the houses are still, in an affordable range. So you have some markets that are just unaffordable, but you still have a huge piece of the country. And I just sent, we're working on next week's newsletter. And one of the posts I want to put in there is the top 25, basically, I think it was counties or cities or something like that are most affordable still to this day. So, but I love your comment, and I love your videos too, bud.
All right, Dan, I think you and I got to do like a little power hour on some of these questions here. We're a little behind.
Okay. Yep.
Drew said we pronounce Oregon correctly. So I think we got it. We figured it out. TC said, housing is definitely unaffordable right now for people only putting 3.5% down. Renting is cheaper here in North Carolina. I'm throwing everything I can into a high yield savings account. What I would be paying for a mortgage versus renting. That sounds like you have a good plan locked in.
Yep.
Let's see.
Every time I look at myself on the screen, I'm thinking of Halloween.
It's very fall.
My daughter did it. Sorry about the lighting, folks.
Korg said, with how erratic these rates have been, if they happen to trend lower, is it a hassle to lock in a lower rate if you've already pre-qualified with a lender? Do you need to completely pre-qualify again? You want to take that?
So here's, I'll pitch in on this one if that's okay.
Mm-hmm.
We are a bank where we're federally licensed. So Kyle and I can do lending all over the country in Puerto Rico. But we're also one of the country's largest brokerages. So this is a comment that I get all the time because of how rates are going right now. So why I choose to be on the broker side of the equation, I'm actually at a bank, believe it or not. We're a federal bank licensed in the whole country, but we broker out a majority of our business. Is one of the reasons I like it is exactly what your question has. If you go to a bank or a specific lender and they lock you in, you're locked. You're done. It's like buying a stock. You watch that stock move, you finally made the transaction, you bought it, and the next day the stock price crumbles. You can't go back to your broker and say, sorry, can I give this back to you and buy it back at today's price? They're going to laugh at you. What we could do, we're going to have your whole file. We already have you approved. We know that the underwriting process and everything else. So if we got you approved, now you're going to fit probably 50 of the 70 lenders that we can work with. If rates drop and we're locked in with one lender, I'm going to go to that lender and say, Mr. and Mrs. Lender, rates have dropped to 0.5%. Can we renegotiate the rate? If they come back and say, yeah, which a lot of them are doing right now, I'll just go in and just take that new rate for you. If they say no, I have the ability now to shop you all around. And we work with about, I think the last count was about 71 or 72 lenders. And that's why I love this atmosphere, because I'm not stuck. If I lock you in and rates come down, we work for you. I want to make sure that I have all the options available to you. So now we can go out and we can relock you with another lender. And the funny thing is, I just posted a video, I think it was today, and the little thumbnail has me in there like this with an Amazon sign and a bunch of houses for sale. I'm explaining to people how we can be your Amazon in today's market of, shopping for a mortgage. So, remember the days when you're shopping for something, you had to check every website and drive to stores to try to find stuff. And then the invention of Amazon. You go there and you're trying to buy something and they got everything imaginable. That's what we can do for you guys. So no longer is the day that you have to get qualified at 5, 6, 7 different banks. And then, you're at their mercy. And then if you want another rate quote, you have to go to another company, put in the application, get pre-qualified. They pull your credit, do all the other things behind the scenes. We can do all this for you. It's one credit pool, one application. We'll get you approved. We'll scan you with over 70 of the country's largest lenders, and we'll lock in. And if rates come down, I can scan you again and move your loan to the other lender. So that's why I reference we're basically going to be the Amazon of the mortgage business to help you guys, that you don't have to go to all these places shopping for the best rate in town. I show you in that video on what we do behind the scenes to assure that you're getting the best rate out there.
Dan, you're not going to believe who's here.
Who's here?
That guy, Rye.
Hey, that guy, Rye.
Don't
Sorry,
give
buddy,
us money. Don't
for 6 months.
Yeah, don't give us money. You don't need to give us money. We're glad you're here.
Please. Yeah.
Oh gosh. Charles, you asked what website is it to apply like that? Our website, When the House You Love. Wait, here. whenthehouseyoulove.com. So what we do is we start out with a free phone consultation. So you can get on, there's no obligation. And what you'll do is either be connected with Dan or our other business partner, Alan. And so we're licensed in all 50 states, and we can do all different types of loans. And we love to kind of help you figure out what kind of payment works for you, what you're qualified for, and help you see the numbers of what you're looking at with buying a home. So we'd be happy to help there. Elizabeth said, it's more of a waiting game for me. I'm single and slowly saving, but I need help with the down payment. I have a 740 credit score. Should I wait if the house passes the housing grant? Was there more? I don't think so.
Yeah.
Elizabeth, there are quite a few different grants and tax credits that have been introduced, but they've been there for a while. And honestly, people were asking this question a year or two ago. Should I wait for these grants to come through? And we just still haven't really seen a lot of progress on what's happening with them. So I personally would not be wanting to wait. I bought just over a year ago. I could have waited for some sort of grant that came up there, but I didn't. I found a house that I liked and went ahead and purchased it. And I'm glad that I did. So I think if we were closer to seeing some traction on those grants, maybe, but at the moment they're more in a very unknown space rather than a short timeline that they'll be finished.
A good program for Elizabeth, especially with a 740 credit score. Elizabeth, if your income meets the guidelines, the one down program would be fantastic, because we're going to give you 2% of the down payment as a gift. There's no ramifications of it. And also you will not have to pay PMI.
Mm-hmm.
So that might be a fantastic program that's available today.
Jessica, you said, can I qualify for a 203K, which is a rehab loan, and a 1% down mortgage? No, the 1% down program is a conventional loan, and the 203K is an FHA loan. So those are completely different loan programs. A 203K though will be 3.5% down. Speed J2 said, I'm 15 days out from closing. Is it too late to get another quote from you guys? What are your thoughts on that, Dan?
Yes, don't do that. You're gonna mess everything up. Honestly, I'd love to help you, but you're gonna mess up the whole transaction because I don't want to steal business from anybody that probably worked very hard to get you to this stage, nor do I want to put the sellers in a bad position, because normally when you're buying, it's a domino effect. Unless you're building, and if the builder will give you some time to check on things, then I'd love to help. I'll say this kind of in jest: we make money by closing your loan, but I'm not here to mess up your whole life and a whole bunch of people's anxiety in life with this, because you're probably buying a house that those people are probably buying a house that they might be buying a house, and you not closing on time messes up the whole thing. Right after you close, reach out to us. I'll put in all your data. And that's what Kyle and I have been working on also in the background, is having people start to send us their information, give us, their loan amount, what type of loan they have, and interest rates. So we can help monitor that for you. And we'll put it into a system where it'll alert us when you have an opportunity, like when rates drop 0.5%, maybe we send you a quick little email. When rates drop 1 full %, we send you another, email, just non-threatening, just saying, hey, would you like to go over the numbers to see, maybe can you save some money here?
I was going to add something to that. Oh, yeah. I mean, the most important thing at this point is you closing on time?
Yeah.
Because the closing date is not quite a suggestion as much as it is part of the contract. So if you've made it this far, it sounds like the offer that you're getting right now isn't terrible. I would say just go ahead, get it closed, get it wrapped up. Make sure we don't want any hiccups to get in the process. Because if the closing deadline gets missed, the seller doesn't have to extend. And I don't want you to lose out on the home just because we might be able to offer something a little bit better. So,
Yeah.
.com said no crash ever, forever.
Never say never, ever.
Ricolas Cage said bought a new construction house in Austin for $499,000 that was selling for $630,000 in 2021. Hoping, oh gosh, that guy Rice sent. You don't have to give us super chats, but thanks. Okay, we'll get to your question in just a second. Hoping the market doesn't correct further, as I would like to refinance at some point. Interesting. Okay, so it went from
it's 630 to 499. That's a huge move. Austin, all the data has it's down 10, 11, 12%. I mean, that's a huge. You're talking what, 20%, 25%. So you probably somebody did FOMO. Somebody went in and bid, and bought the house way over market price, and that's what we saw. And that's why I even said that market's going to correct. You're going to see Southern California where you had 100 bids on a house and they were bidding 100,000. I had a gentleman text me today. It was actually on my YouTube channel. His next door neighbor put his house up for 1.2 million. They had multiple offers, ended up getting 1.3 million in cash. So
wow. Okay, let's see. That guy Rye. My grandma by marriage just asked if I wanted. Oh, grandpa. I'm sorry. My grandpa by marriage asked if I wanted his house when he passes. Through his will. Condition is a little rough. Zillow says 90,000. It's in the hood. Don't know what to do or think. Interesting. Okay. Is your initial thought? I'm curious first if there is any sort of mortgage on it, because that can change things just a touch. But I'm also curious if your thought is initially renting or selling. And if that's what you're trying to decide between is renting or selling. Do you have any additional thoughts on this?
No, I was going to say, and please don't take offense to this, but when you're saying you mentioned it's in the hood. So that mention to me says it's not an area that you would really like to live in. So if the house is free and clear, you always have the opportunity to sell it. Maybe the family doesn't want you to sell it. So maybe put a little bit of money into it and rent it. You can get Section 8 from the government. The payments are coming in like clockwork, and it's, that might be an option for you. If you're not looking to live there. And like Kyle said, is there a mortgage on there? Because if it's free and clear, go in, maybe clean it up a little bit and sell it and use that money to buy a house not in the hood.
Let's see, Jesse Joseph. I really don't care about rates. Just wanted an offer accepted without getting outbid over and over. All I need is a 3-bedroom off-street parking and gas heat in New England. Yeah, you're not alone in that too. Yeah, as much as people are complaining about rates, I think it's still people are running into the same problem where it's the competition is still really difficult.
Yeah.
And it's a really tough spot to be in right now if you're looking to buy.
See,
Uh,
the funny thing is all these crash and burn videos and houses aren't selling and whatever. We have people right on here live telling us that they're having a tough time finding a house without getting overbid.
yeah, the inventory is just not there to
Yeah.
match the massive decline in home values that is
So
that
on
people
my
are talking about.
every day, I don't talk about home prices anymore, really, because it is all over the map. You have Austin, Texas, which the young man just said, that market, the house went for six something, now it's 499. You're having markets like that. Then you just had the person in New England saying, there's multiple bids on houses, can't even get one. So their dynamics are different everywhere you go.
Yeah, yeah. I think we talked about that quite a while when we used to do some of the live streams a little bit more. Was how many people would use national data to tell a story about every single market in the United
Yeah.
States. And like we were just talking about with Austin, Texas, it's like, yeah, some of these markets that saw huge 20% plus increases in value are pulling back maybe 10%. So you have still a net positive, like a very large growth year over year, or maybe over a 3-year period of growth in home value. But that narrative doesn't apply to a lot of the rest of the US. And I know it's shocking for some people to believe, but not everybody lives in super large metro areas.
Yeah.
And so it's really unhelpful, I think, when people are just telling one narrative about the national data, because the US is huge. Like, I think people sometimes forget how big the US is. And we can't just say, here's what's happening as an aggregate of every single market. And that's exactly what's going to happen in your specific neighborhood. Like you were mentioning, Dan, it's like, okay, so you hear Austin or San Francisco pulling back in home prices, whereas your area is still seeing strong appreciation. And so if you're taking advice about what's happening in these big markets in your area, you're going to make a bad decision about purchasing in your area. So it's really interesting to see that like disconnect that I think is happening and what's being told about the market, and then what I think a lot of people are experiencing when they're actually looking to buy for themselves.
Hartford, Connecticut is up 10% this year. So if I use that as all my data, you're thinking house prices are still going out the roof, but they're not.
Mm-hmm.
That's the top tier. Then you have Austin down 12%. So then you got to fill in the blanks.
Yeah. Yeah. Erica said the cost of rent is what has pushed me to finally start considering buying again. I'd like to enjoy retirement when I get there and not have to work till I'm dead because of yearly rent hikes. Totally get it. A lot of people are there too. I have one of the loan comparison calculator I have at the very bottom of it goes through that example of showing buying a home isn't really what it's touted to be as this investment. A lot of people are like, it's an investment, it's going to make you money. Not really. It's more that it saves you money compared to renting, because you get appreciation and you're paying money into paying down the mortgage, which is also called amortization, that you don't pay in renting. Whereas renting, you don't get any of that money back unless you're in some kind of like lease to own kind of option. So the only thing though to keep in mind though is even with a mortgage, you still can see increases in your monthly payment due to taxes and insurance increasing. So just do keep that in mind. Mayor, I believe is how you say your name. Are you a mortgage broker? Yeah, so we broker mortgages, but we are also a federal bank. So we work in all 50 states, and we work with over 70 different lenders. So you can get pre-qualified right up here, winthehouseyoulove.com. Unfortunately, you can't click on this, but there are also links in the description. Drew said he's in the chattel world, Dan.
Oh, really? Interesting. I just
Let's see.
I just ran into a loan that was they had a chattel loan on a modular, no, it was a mobile home. We ended up getting it done, but it was like pulling teeth. So it's good to know.
Darren said my mortgage went up $100 due to taxes and insurance. Whether you rent or own, there's no protection from annual increases. The only protection you have from annual increases would be your principal and interest payment, as long as it's on a fixed rate loan as opposed to an ARM, adjustable rate mortgage. But yeah, of course, taxes, insurance, those are separate from your mortgage, and can increase. You can always shop around for different insurance to get that lower if you need to. However, you can't really shop around for taxes.
Yeah, I would highly suggest that's what we should do. We should put together some kind of insurance thing for those. Unfortunately, it's not for new. Well, it might be for new home buyers. I had Allstate for years and years and years. Finally, I had a buddy of mine who's a broker. I'm like, okay, what can you do for me? He saved me, I think it was $2,200 a year by bundling it through another company, and it was like, you're kidding me. So yeah, please, if you have mortgage, if you have insurance, homeowners insurance, and especially if it's with one of the big companies like Allstate, State Farm, please call a broker. I'll go to my website. I think I might even have a link down there. If not, we'll put a link down there to some mortgage or insurance brokers. Call them. You got nothing to lose. There's no, just give me your information, see what they can do for you.
Yeah. Christine said, what about USDA? I'm not sure if there was something we were mentioning specifically, but USDA is a fantastic option. I'm trying to remember, were we talking about something?
USDA is harder than a lot of people think. Okay, so if you're looking for for a USDA loan, I know it's intriguing because it's 0% down and no PMI and all this other stuff. It's hard to qualify. They go by square footage of house number of people at the house. Every person in the house, you have to use their income. The ratios are really tight. They're really adamant about your credit. It's hard. It's a fantastic program if you can qualify. Probably half of the consultation calls I take, everybody wants USDA. And then you ask them, and it's like, well, where do you live? I live downtown Chicago. I'm like, you're not going to get USDA. Well, I want no money down. So I get it, but it's a more difficult program to get qualified for than a lot of people make it seem.
Yeah, it's a tighter box. Cool. So what I want to do really quickly, I want to show you two things that Dan and I have been working on. So the first here is we do have a newsletter that we're working on, and our goal was to just give you as much market information that you want to know as possible without it being, you have to sort through all the boring extra stuff. So the link is down below if you want to sign up for that. We're going to send these out every Wednesday morning. And so what it's just going to do is go through just some highlights that you might want to know about what's happening in the mortgage world as you're looking at buying a home, or maybe you're in the home buying process. We also just cover like a quick snapshot of what's going on in the market. The second thing that we do is if you go to our website, winthehouseyoulove.com, you can ask us a question. All right, there are a lot of questions that we're not able to get to on every single live stream, just because there are so many questions, and Dan and I talk way too much, probably. So what you can do is just click this button. I have a question right here. So click that button, ask us a question. When you type that in and send it to us, what it's going to do is it comes in to both of us, and then we'll answer it with a custom video. So it's going to be either myself or Dan. We'll sit there, we'll say your name, answer your question, and we'd be happy to help, because we can't get to every single person's question on these live streams, unfortunately. But we would love to help, and there's so many different ways that we can help you. Dan and I both have tons of videos on our channel. Dan's video channel is linked in the title of this video. We have tons of videos. You can ask us questions in the comments. You can go to the website and ask us questions, and we'll answer with a custom video. You can follow us on the next upcoming live stream that we do on Wednesday. And then, of course, if you want to talk to a mortgage advisor, if you're in that spot where you're like, I want to figure out what my numbers are, I want to figure out if I can get qualified for a mortgage, I want to take the next step, but I don't know exactly where to start. That's what we do on a consultation call. We'll help sort out and organize all the goals that you have, figure out what your scenario is. That way we can help you get qualified for the best loan. So it doesn't just have to be one loan. We can help you take a look at conventional and FHA and VA if you want to, or we can take a look at 1% down and FHA. if you want to. We'd be happy to help. So you can go to winthehouseyoulove.com right up here. And Cork said, I scheduled my call for next week. So that's awesome. So thank you so much. We will be doing this live stream again this upcoming Wednesday, same time, same place. And thank you all for being here, asking questions. Again, if we couldn't get to your question, just go to the website, type in your question there, and we will respond with a video. And we look forward to seeing you all next week.
Take care, folks. Thanks for joining us.